You're listening to international investment advisor Doug Goldstein on the Goldstein on Gelt show, the financial show where we'll talk about how you can make the most of your money. With all the confusing financial chatter bombarding you each and every day, Goldstein on Gelt will give you the practical information you want and need about living a financially stable life. Here's your host, money maven Doug Goldstein.
Okay, we are back. I'm very happy to have on the Goldstein on Gelt show Gary Rivlin, a best-selling author, recently came out with a book called Broke USA with a very interesting subtitle. Gary, tell us the subtitle of your book.
So, From Pawnshops to Poverty, Inc., How the Working Poor Became Big Business. So, my fascination in 2008 as the global economy was melting down were all these businesses, pawnbrokers, check cashers in the United States, what we call payday lenders, short-term small loans, $200, $500, but at preposterously high interest rates. I really wanted to look at those businesses as they went into hard times, because conversely, hard times would be good times for them. There's an expression I learned. I spent like 2 years on the economic fringes looking at these different businesses, spending time with some who created really, really big businesses out of that in payday lending, check cashing. And there's an expression I learned. A banker looks for 100 people worth $1 million, but a payday lender, others on the fringes, they're looking for 1 million people, none of whom even have $100 to their name.
So describe what their business model is. What are these payday lenders all about?
So payday lenders, again, a couple of $100, depending on the state, they could lend up to $600, $800, and it's a 2-week loan. And everyone has a job. You have to have, well, at least they're on some kind of regular government check, Social Security in our country. And so it's a loan against your next paycheck, against your next government check. And, we have usury laws in this country, a cap on interest rates at 15, 20, 30%. But these got an exception. So they're actually charging rates that work out to an annual percentage rate of 400%. Some states in this country, more than 400%. Online, they're charging 700, 800% interest. And so even though it's such a nickel and dime business, it's a $15 fee here, a $70 fee there, it turns out it's very, very big business.
Let's break that down a little bit more. I just want to understand the business. So they have to. A guy comes into their shop and he's getting paid in 2 weeks, and he needs $400 right now. That's the model you're talking about?
Yes, theoretically, his car broke down. He's got a dentist bill. He just can't make the bill. I mean, we're talking about people who are barely getting by. They have a job, but it's $20,000 a year, $30,000 a year. So they need a short-term fix.
So they need a few $100, right, to cover them for the short term. And this payday loan company is going to somehow get to know this guy. They're going to process the loan. They're going to lend him money. And the risk, what's the risk to the company to lend the money?
that they don't pay it back.
Okay.
So there's no real collateral. There's just so what the customer does is writes a post-dated check. So typically it's a $15 fee for every $100. I mean, again, it varies state to state, but that's a typical one. And so you take out $300 and you post-date, you write a check that's post-dated for $345. So the risk is that when that lender goes to cash that check, that there isn't enough money in a bank account to cover it. So that's go ahead.
So listen, I'm not trying to defend. I don't think people should be paying 700%, interest. So I'm not trying to defend that, but I am trying to understand that the payday, the company does have a risk. Obviously, there must be a fair amount of default on these checks, and they do lose money from time to time, or at least have to chase people down to get their money. And because it's a legitimate business, they're not loan sharks. They're not, breaking your kneecaps, are they?
No, they're just calling your work. They're calling your home every day. Some actually visit the home. I mean, and by the way, I'll point out they're not breaking kneecaps, but the typical loan shark in our country is charging what would work out to an annual percentage rate of 150%, 200%. These folks are charging twice that much, if not more. In fact, I actually found a loan shark who just laughed at me and said, "I'm so jealous. I mean, he was a small-time loan shark, but the fact that a guy in his hometown had taken this idea. He's from Cleveland, Tennessee, where the payday loan was invented in the 1990s by this guy Alan Jones. He was amazed that this guy just took this idea. Alan Jones brings in $25 million a year after taxes in the payday loan business. So it's a small-time business, $25 fee here, $75 there, but you add it up. He's got 1,300 stores right at its peak. He had 1,300 stores. And, it is big business.
Mm-hmm. We're talking with Gary Rivlin, a best-selling author who wrote a book called Broke USA. He talks about some of the problems that the very, very poor people have in, well, let's say just accessing cash. So I'm getting the sense from our conversation, Gary, that you're not a big fan of these companies. So my two questions are, one, is this something the government should, make illegal or prohibit? And secondly, how should these people get access to cash?
So take the first part first. So these were sold to lawmakers. Again, we have laws in the U.S. against that cap interest rates. Even Adam Smith, and the invisible hand, Mr. Laissez-faire, said that for a functioning financial system, you have to have a fair rate of lending. But state by state, their lobbyists went around convincing lawmakers, hey, people are desperate out there. Let's give an exemption for emergency loans. A car breaks down, you can't get to work. You just need for 2 weeks a short-term loan. Big deal if it's $45 for that 2 weeks. You're avoiding $50 in bounce check fees because you're taking out a payday loan. The problem, the flaw in that is that there was a study here a year or two back that showed that 70% of the customers have these loans out for more than half a year. So then it's not for an emergency loan. It's just a very expensive way of balancing your checkbook. I talked to one guy who's a big time payday lender who he left the business, and almost every one of his clients, he told me, hundreds of people per store, almost every one of his clients had these things out all the time. So for the same $500 loan, they're paying $2,000 a year in fees. But with that said, can you outlaw these? Your second question gets to the problem here. There is no good alternative for those living on the margins. In your question, you said the very, very poor. Just one correction, that it's not the very, very poor, because you need to have some kind of check coming in. So I would call them the working poor in this case, because you need to have at least the promise that you'll pay this back. So there's all sorts of products for them. There's another one called the title loan. That's using it's like a pawn shop, but your car title is the loan. That's actually insidious, and that one I would outlaw, because you're putting up something very valuable, your car, and you're loaning money against it. Of course, if your car's worth $2,000, they'll lend you $500 towards it, because if you default, they're going to take your car. And even though there's a valuable piece of collateral on that loan, and they're charging 200% a year in interest, 300% a year in interest, sometimes more. So that's the problem. It's the rates they're charging.
So what's the alternative? I mean, it seems to me as though in a normal free market, and listen, I could probably walk downtown and put up a sign and say, I'll lend you money and I'll only charge you 300%. So there must be a reason why they need to charge these rates, or why the people are willing to go to these shops.
Well, they charge these rates because they could get away with it. I'll throw back at you that, again, even Mr. Invisible Hand, Adam Smith, said it's essential to a functioning financial market that there's some cap on the rates. But I'll point to Florida, which says you can only take out one of these payday loans at a time. We'll limit the number you could take in a year, and we're going to tell you can't charge more than $10 per 100, which at least is 250% or so as far as an APR. I talked to a guy from a credit union in North Carolina, a really big credit union, all the teachers, all the state employees. He's charging 12% annual interest for his payday loans, and he calls it the most profitable product he has. There's a banker in Louisiana.
Sorry, so wait, that's a great example you're giving. So in other words, if he's charging 12%, that's he's competing against the 700% guys. Why wouldn't more people just go to the 12%?
Well, it's limited. It's not like what's brilliant about the business they built is these are like McDonald's. There's tens of thousands of them. In fact, there are more payday lenders in our country than there are actually McDonald's and Burger Kings combined. They market these things. They're storefronts. They make it so easy. And, in honesty, where payday lending is, I don't know, about a $40 billion a year business in this country, these others, if you add them up, don't add up to $1 billion in payday loans a year. It's so much small time. It's a small service they offer. I just bring it up as proof that the profits that the payday lenders are making are obscene. If the states just took away the exemption to the existing usury laws and let them compete, you would see that instead of the single most profitable product out there, I mean, it's amazing. Subprime credit cards, which I write about in Brogue, subprime of any kind, subprime mortgages, they generate 2 times or 3 times the profit for the lending institutions. Big.
Oh, presumably there's more risk involved.
Like No. But what I'm saying is, the risk is built into that. Yes, 10 or 15% of these you lose 10 or 15% of your money through defaults, but that's built in. Even factoring in defaults, I'm saying as a product, the net income, the profits you get at the end of the year from this product, the banks were showing 2 or 3 times the profit margin. So instead of making a few percentage points on this product, they're making 8, 10, 15% profit margin on that. Early on in payday, before there were any rules, these folks were making 30-40% profit. That I wrote about Silicon Valley for a long time. they're jealous of those kind of profit margins in Silicon Valley where they don't make anything.
It just seems to me. I don't know. I hear what you're saying, and it sounds rough for these people who just don't get a good deal. And it's not like you can go into your bank and get a mortgage for 4 or 5 or 6%, and they just maybe don't have the opportunity to do that. So they're doing these very, very short-term loans. So Gary, we're just about at time, but in the last few seconds, I know that there's a lot more you cover in your book. Tell me, how can people follow you, follow your work, and really learn more about what you're talking about?
So I have a website, www.GaryRivlin, G-A-R-Y, Rivlin, R-I-V-L-I-N, same as your president.com. And I've written about the poverty industry, but also Silicon Valley. I just wrote something about New Orleans after Katrina. So I tend to write on a range of topics.
And that is very true, and it's fascinating. Gary, I really appreciate the time. We're going to put a link to that at the show notes of today's show at goldsteinongelt.com. Thanks so much for joining us.
Thank you.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Doug's weekly radio show is heard around the world, but if you miss it, you can download the podcast at www.goldsteinongelt.com. The Goldstein on Gelt Show gives you up-to-date financial ideas so you can get on the path to financial freedom. If you'd like your questions answered on the air or off, send Doug an email to doug@profile-financial.com. It's your money for your future, so join Doug every week to build your wealth on the Goldstein on Gelt Show.